Qantas has rejected any suggestion that a tie-up with Singapore-owned Optus has anything to do with plans to start a Singapore-based airline. And in bad news for its customers, Qantas boss Alan Joyce says the fuel surcharge is set to rise even further, despite the price of jet fuel falling dramatically in recent weeks. Well, Chief Reporter Andrew Robertson has been with Alan Joyce today at the unveiling of Qantas's deal with Optus, and he joined me in the studio a short time ago. Well, firstly, Andrew, what is it that Qantas and Optus have announced?
Well, what they've announced is a tie-up between the Qantas Frequent Flyer program and Optus, which will allow Optus customers to earn Qantas Frequent Flyer points when they buy Optus products and services. Qantas customers will be able to redeem some of their Frequent Flyer points for Optus products. Now, the Qantas Frequent Flyer scheme has nearly 8 million customers, which is why Optus says it was attracted to that scheme, potentially another 8 million customers for it. From Qantas's side, they say having a tie-up with a company as prestigious as Optus is a good thing for its frequent flyer program.
Now, only this week, though, we've heard that Qantas is looking at starting a full-service airline in Singapore, of all places. But Alan Joyce says that the fact that Qantas is tying up with Optus on frequent flyer points is just a coincidence.
He does. Well, I put that to him. I suggested that maybe if you're looking at starting a full-service airline in Singapore, having a good relationship with a Singapore-based company, remembering that Optus is owned by Singtel, Singapore Telecommunications, I suggested that might be a good deal, a good thing to have on the side if you wanted to do business in Singapore. Qantas's international division is suffering at the moment, which is why Qantas is looking offshore to try and cut costs and things like that. Mr. Joyce denied that these two deals are linked. In fact, he described it as one of the best conspiracies he'd heard in a long time.
We've got a range of people looking at the international business, and there's a whole series of potential solutions that the international business potential solutions for the international business, and it's too early for us to talk about this. But there's absolutely no link whatsoever, and that's probably a Donald Trump theory that he probably would portray around the place.
And of course, that last reference to Donald Trump in the United States just recently, Donald Trump was pushing the line that President Obama was not an American, and that forced the president to release his birth certificate.
Well, indeed. Now, the price of jet fuel has been coming down in recent weeks. That should be good news, presumably for both the airlines and the customers. And yet, Qantas is still planning to put the cost of tickets up.
Well, cynics might say that's because Qantas doesn't face enough competition. Not surprisingly, Alan Joyce has a different view. He says because the price of fuel has risen so far, even though it's come back in recent days, it's still very elevated. And he says that Qantas just isn't recovering the money that it's having to spend on jet fuel.
When we announced the fuel surcharge increases that we've had over the last few months, we said we weren't recovering the increase in fuel that occurred. So we're a long way from the fuel price, meaning that we are recovering that cost. And we're still in the territory of going forward, looking at further fuel surcharges increases.
Well, no joy there for travellers. And Alan Joyce had some more bad news for customers over the carbon tax.
Well, there are reports that the carbon tax could be as high as $40 when it comes in, and of course that will flow on to the price of carbon in the trading scheme that's going to follow. Alan Joyce says Qantas is prepared for whatever price is put on carbon. It's been negotiating with the government over that. The bottom line, though, according to Mr. Joyce, is that any cost of carbon will be passed on in full to Qantas passengers, which many other industries won't be able to do.
$40 sounds quite a lot, doesn't it, in the scheme of things? But look, you also found some insights, you heard some insights from Qantas's low-cost subsidiary Jetstar on how it actually drives profit growth despite continuously slashing fares.
Well, Jetstar's announced today it's slashing fares even further. Its basic fare from Sydney to Melbourne, for example, is going to become $59. And many people will be wondering, well, how does the airline survive with fares that low? Well, Jetstar boss Bruce Buchanan says it's because of all the extras people buy once they get on board the plane.
By unbundling parts of the product, we've been able to give them even lower fares, and that helps us because it helps us get our ancillary revenues up by selling other things like iPads and MasterCards and a variety of things now, and we're leading the world in terms of ancillary revenue collection, and that helps us still maintain profitability and invest back in the airline and growth, which enables us to deliver lower fares.
And Bruce Buchanan told me after that news conference that, in fact, all Jetstar's profit comes from that ancillary revenue, which means Jetstar is a bit like the petrol station that doesn't earn much from petrol but earns a lot from what it sells in its shop.
Andrew Robertson, great to have you in here. Thanks a lot.
Thanks, Dickie.